All right. Hi, everyone. Thank you so much for tuning in for another EcstaSHE Hustle Hour live session. Every 2 weeks, we organize what we like to call a Hustle Hour, which is basically a live stream session with an excellent guest speaker. Really oftentimes, these guest speakers are women. Because Hustle Hour is actually originally part of the program of Thrilled Labs called EcstaSHE, which is the female business community part of Thrilled Labs. But today we have a first, actually, that is Alireza, our first male guest speaker. He is a partner, actually, at a very distinguished law firm called Annerton. He's also a DLT expert, a board member, and an advisor, a publisher, and even much more. So it's also quite interesting to know that Alireza is involved with several think tanks and board positions, for instance, of the European Commission's Blockchain Association. Finally, Alireza holds several advisory roles, including at our Friends of Blockchain Founders Group, a German and Liechtenstein-based VC. He focuses there mostly on advising blockchain startups on all things like digital assets. Alireza is also a very big expert in terms of NFT projects and platforms, and he even co-publishes for Walter Kluwer's legal journal, very interesting, on the digital economy. His expertise lies in banking regulations, compliance, market entry, and the regulatory framework of digital assets. So that's quite a bit, I would say.
So thank you, Alex, and thank you for also the introduction. I'm blushed. Yeah, I didn't know that I get expected so much intro, and I'm looking forward to explaining a little bit about what I'm doing and what crypto regulation means and the law on crypto. In a nutshell, I did a lot, and I'm happy to share today with you my understanding of crypto regulation inside the European Economic Area, a little bit of expertise also outside of the European Economic Area, but not that much, and mainly with Germany I have knowledge. And yeah, to hope that you get out of this presentation today with a little bit more of knowledge. So with this said, let's jump into it. What is DeFi? What is it? And as a lawyer, you should always look for a proper definition. You should not look at bullshit bingo where people say DeFi is this or DeFi is that. And a definition is always good. And a definition is even more good if it comes from the lawmaker, or if there is no definition by the lawmaker, then at least a reputable regulator. And in this case, you see here a definition of DeFi, which comes from the German Bundesbank, so Deutsche Bundesbank, which is the central bank in Germany, one of the two regulators. You can Google that up. It's from July 2021. And it is a pretty good definition because it doesn't only give a definition, but gives a little bit of insight how the German regulator thinks of DeFi, at least the German Bundesbank. It says decentralized financial applications provide financial services in connection with crypto token. So the German Bundesbank is always using crypto token. They do not say cryptocurrency for some reason. In decentralized networks, replacing intermediaries such as banks, stock exchanges, or insurance companies. So this is the definition. Put it in mind. DeFi is a tool providing financial services, replacing an intermediary, and these services are related to crypto assets. And then the second sentence says that this dynamically growing area is proving to be very innovative and is increasingly developing points of contact with the conventional financial system. So this is, in my opinion, a very positive statement. So something which I would not expect from a traditional conservative player like the German Bundesbank, but it really says it's innovative, it's increasingly developing, and it has points with the traditional players. And I know the gentleman who published that paper. I know his team, and they're really looking at DeFi and innovation from a positive perspective. And this is important to understand. That we do not just have a definition, but we have a definition from a reputable player, and it has some positive background. You can download that document in the internet, read it. It's in German and in English, and it's worth reading because it has lots of technical and economical information, not just legal stuff in it. So with this in mind, you now know what DeFi is. And if you think of DeFi, you would probably not think of Bitcoin. But for me personally, Bitcoin is one of the best and first proof of concepts when it comes to DeFi. Some of you would say, oh, DeFi, isn't it Ethereum? No, DeFi is not necessarily Ethereum. DeFi could also be on the Bitcoin blockchain. And if you look back at the definition which I showed you, it says decentralized financial application providing financial services in connection with crypto token in decentralized networks, replacing intermediaries such as banks, etc., etc. So now back to the Bitcoin slide. So what is Bitcoin? What is the tradition of Bitcoin, like the origins of Bitcoin? Look in the white paper of Bitcoin and you see that it is a payment instrument. Originally, it's a payment instrument. I would not really say it's a payment instrument. I would rather say it's digital gold. You buy it, you hold it, you hodl it until it becomes more, and then you sell it. But some use it, and those who are from the beginning with it use it as a payment instrument. Of course, as a payment instrument, it has lots of cons, which are the unstable currency and so on and so on. But it has also lots of pros. And the pros come when you look at this chart of a very simplified chart of how banking cross-border transaction works in a traditional way, where you have at least two intermediaries, like two banks, one bank on the sender side, one bank on the recipient side. And in between, you have some couple of other intermediaries like PayPal or Visa or MasterCard, where you have some payment services providers. So if one of these players is not functioning because of, I don't know, they do not serve you because it's weekend, or they do not serve you because you're located in North Korea or in Iran, or you're located in Cuba, then you have problems. And if you look at Bitcoin, it's peer-to-peer. Therefore, you replace those intermediaries and you have a peer-to-peer transaction. In my opinion, it's also not payment because of some other reasons, which I'm going to show you on the next slide. Because a payment transaction, in the end of the day, if you want to pay a merchant, like a shop, I don't know any shop which accepts crypto as a payment, because accepting crypto as a payment means that they take it on their books, on their balance sheets. They took it on their wallet and they use it. And this is not really what happens. If you look at this chart, which is from the BIS, from the Bank of International Settlement, this is something more which illustrates a payment with crypto. So left side, again, traditional, very complex, very dependent intermediaries. The right side, yes, you have your self-hosted wallet, you have protocols, you have the blockchain, you can do a direct peer-to-peer transfer. But in the end of the day, if you want to do an on-ramping or off-ramping, so you have fiat money and you want to buy Bitcoin or some crypto assets, and you want to do in the end some off-ramping, you will always need, again, the intermediaries. And this is the reason why I wrote a couple of papers on sanctions and so on. You cannot bypass sanctions with crypto, because you need to buy the crypto. At the end of the day, you need to put the crypto back to fiat. And for that, you need intermediaries. You need a bank, you need a crypto exchange, you need a e-money payment services provider. And this is why, even though we have a peer-to-peer transaction, we're not at a point where you say you replace all intermediaries, but you at least limit the number of intermediaries if you do a crypto payment. And I put so much attention and information on crypto payment, because crypto payment is something which is right now very popular, not just giving the regulatory background, but also giving the need in the market, because not just because if you're located in El Salvador or in Iran, more and more see the pros of using crypto, especially a direct transfer 24/7, less costs, not dependent on any terminals and so on. And therefore, crypto payments become more and more popular. But crypto payments are not the only piece of the cake which we have in the DeFi environment. So you'll see the left top corner where you see payments. There's much more. There's infrastructure, there are DEXs, there are custody services, KYC, insurance, and so on and so on. So please do not limit your view on payments only. There's much more. And I have some more examples when we get to the next slides, when we get to DEX services. But what is also important, I said it in the beginning, we talk about DAOs. DAOs are not DeFi only. This is some other chart where you see what kind of DAOs could be existing in the environment. And the DeFi one is a very small piece of the whole DAO environment. So please do not limit just crypto and blockchain to financial services. It's much more. So if you're not into financial services at all, that's good for you, because there's some other things which you can do with blockchain and DAOs. But in the end of the day, I'm doing this business for the past 13 years. I can say that there's much more traction when it comes to the financial sector than to the other sectors. That's why I also focus a little bit more on the financial sector on the next slides. So this is an illustration I've drawn up, a simple one when it comes to a DEX transaction with someone located in Germany, someone located, let's say, in China, but most likely not in mainland China, but maybe somewhere in Singapore or Hong Kong somewhere. And this shows you a peer-to-peer transaction with self-hosted wallets. And you see someone who has a self-hosted wallet, and on the left side is connecting to its 1inch account and wants to do a swap, finds through the Pathfinder or some other protocol which 1inch is providing a perfect match. Maybe this match is inside the 1inch bubble, but maybe it's outside. So in the outside world, you see Uniswap on the right side. And then you do a swap. And you do that peer-to-peer. And both of these DEX providers, they are also no really intermediaries. You could do it also directly peer-to-peer. They help you in this context with the best price and with the best execution, so you do not have any liquidity risk. But so what are the legal issues here? And the legal issues, when you look from a regulator, from a lawyer perspective, you would ask yourself, who's responsible for the transaction? So what if something goes wrong? What if the protocol of 1inch or the protocol of Uniswap is hacked or is not really working. We had that back in the days, I think 2017, with those ICO, which was happening with the DAO. So yeah, and this you can see, so who's responsible for the transaction? Who is the contractual relationship? Who has a contractual relationship? What happens if the protocol fails, as I said? What happens when someone hacks the DEX? And all of that is something where the regulator becomes nervous. And this is something where the regulator jumps in and says that something needs to be regulated. So we have someone who's responsible in the end of the day, and stands up when something goes wrong. And if you look at this chart, and if you get later the slides, these are all hyperlinks, and you can click on it and you get to the source, to the main source. And it shows you an illustration of the past 10 years, so 2014 till 2024. You see how the regulation really developed. As you can see on the bottom, BaFin was the first global regulator warning towards cryptocurrencies, Bitcoin at that time. FATF on the top side started also with recommendations and warnings. This all developed to a more friendly tone. FATF then somehow also provided language on how to really use cryptocurrencies in a proper way. And on the bottom side, you see the regulation which followed. Some of the regulation German specific, but some of it, like the DLT pilot regime or the MiCA or MiCA specifically, were focusing on European Economic Area. And you see also here the anti-money laundering directive, because this was the first initiative by the lawmakers which provided some regulation on crypto assets. But if you are familiar with regulation, you know that regulation always somehow comes whatever the FATF is suggesting, and the FATF is doing everything against money laundering and combating the finance of terrorism. Therefore, the first regulations we had in place with the Anti-Money Laundering Directive 5 was mostly focusing on the issuers, on the crypto exchanges, on the wallet providers. And basically what it did is providing that those players should be complying with AML and with CFT obligations. In Germany, it happened a little bit more, not just anti-money laundering rules, but also licensing rules for crypto service providers. If you look at regulation, what you should know is that we always look at different token types. So as a rule of thumb, and this is something which the Swiss regulator FINMA showed up in 2017, is that we have three kind of token types: payment token, security token, utility token. In the middle, security token, those which are heavily regulated. On the right side, utility token, which is not that much regulated, and in some areas not regulated at all. And on the left side, payment token, which could be regulated under the existing e-money regulation regime. But as a rule of thumb, the security token and the utility token have something in common. The issuer of the token is the one who's accepting the token, so there's no third-party acceptance, whilst the payment or exchange token has always a third party, so someone who is accepting the token besides of the issuer. And this is something which you can understand. However, the utility token, unlike the security token, is not giving any dividends, which is not giving any passive income to the token holder, whilst the security token is giving passive income. So this is what we had so far until 2023. And since the middle of 2023, we have the markets in crypto assets regulation, which jumped in. And the markets in crypto assets regulation, here again is a link to ESMA documents, is something which is regulating the crypto assets. So those which are not already financial instruments, so security token under MiFID or under US law, which are not already regulated as deposit or e-money. However, watch out, because even under MiCA, we have the e-money token and the asset reference token, where e-money rules apply at the same time. So it doesn't mean that you have crypto assets within the MiCA and nothing else applies, but which means that, yeah, it could be still that e-money regulation would apply. You can read a little bit about DeFi, because DeFi is something where you look at the recitals of MiCA, which says that MiCA should not apply to DeFi, and this is what it really does. But in the end of the day, you have to look if it's fully decentralized, and only fully decentralized applications do not fall under the MiCA catalog. On the right button, you see a logo, which is basically, again, a document. You can double click on it, or you click on the top link to the paper of the European Parliament, because the European Parliament is looking more and more into DeFi and trying to put it at least under the next regulation, which would be the MiCA 2.0, which maybe comes in 2026. But now we have the MiCA 1.0, which is effective since the 30th of June last year. But effective does not mean it applies. It will only apply for asset reference token, e-money token by the middle of this year, so by the 30th of June this year, and for all the remaining crypto token by the end of this year. And when I say crypto token, crypto assets, you see here a slide which differentiates between the different token types. On the left side, you see those crypto assets which do not fall under MiCA, which is true non-fungible token, NFTs, anything related to CBDCs, those central bank digital currencies. and security token, which are already covered by MiFID or any other security law. The remaining part on the right side, as I said, and you can see e-money token, asset reference token, and anything else, which could include cryptocurrencies and utility token. These are inside the catalog of MiCA. And when I say inside of the catalog of MiCA, you should understand what does it mean. So we differentiate between the issuer or the offerer, which is the one who is providing this token for the first time to the public. This person needs a white paper and needs to publish the white paper. This is not those kind of white papers which you know from back in the days in this shady ICOs. It is a document, a formal document, which you need also to notify with your domestic regulator, with a national competent authority. And then you benefit from that if you do it. You're not just allowed to provide the token and do the ICO or the token generating event in a country where you talk to the regulator. You can do it to the whole European Economic Area, which is called passporting. So this is something which we have in respect to the issuer or the offerer. When you look at the CASP, which is a crypto asset service provider, there it is a little bit different. And when we talk about CASPs, so the CASP of any of this kind of crypto assets, asset reference token, e-money token, any other crypto assets, must provide a service. And we have a catalog of 10 services within MiCA, which are listed here, and you have to fall within this catalog. So you have to provide custody, or you have to provide operating a trading platform, exchange for crypto assets to crypto assets or crypto assets to fiat, execution of orders on behalf of your client, placing of crypto assets, reception or transmission of orders with your clients, advising on crypto assets or transferring of crypto assets, and last but not least, financial portfolio management or crypto asset portfolio management, which is providing management on crypto assets. So only if you fall within one of these 10 crypto asset services, then you would need to have a license according to MiCA. And if you don't have a license, you're not allowed to provide the services unless you do it outside of your European Economic Area on a so-called reverse solicitation, which means if your customer or your client is asking you by its own exclusive initiative, you are allowed to provide the services without having a MiCA license. In any other cases, especially if you want to do marketing and active solicitation inside Europe, you need either your own license or your joint venture with one of those regulated partners who are located inside of the European Economic Area. A couple of last words to NFTs. Of those of you who are active with NFTs, I did lots of NFT advice back in the days, but the business became a little bit less in the last 18 months, I would say. But still, I do some business with NFT issuers. If you have a true NFT, which means the token is not just from a technological perspective, non-fungible, like being an ERC 721 or ERC 1155, but it's also from a legal perspective or from a real perspective, from a functional perspective, non-fungible, which means the tokens, if you have a collection of tokens, they do not cover or represent the same goods, the same right, the same service, but different goods or different rights, then the token is truly non-fungible. So both elements, from a technical perspective, but also from a functionality perspective, must be non-fungible. Then you're outside of MiCA, which is not necessarily good because you can still fall under the domestic regulation. And to give you an example, the Bored Apes, they're, in my opinion, truly non-fungible because the tokens are minted on an ERC 721, and each token represents one unique Bored Ape. So you never have a token which is reflecting the same ape. Therefore, you have a unique token with a unique technical and also functionality. And on the other hand, if you have a collection of NFTs which all represent the same image or the same right, like these collections of sportsmen or sport club NFTs, they are mostly not fungible, maybe from a technical perspective, but still fungible, which means changeable or similar, because they all the token reflect the same image or the same goods, the same service. And then they would fall automatically inside the MiCA catalog. So if you're planning to issue NFTs and you want to try to be inside or outside of the MiCA, you have to be sure on both aspects. With this said, I think we have lots of time for questions. And for those of you who cannot unmute themselves, they can type in. For those of you who want to connect and ask me later some questions or contact me later, you can just Google me up or look in LinkedIn or screen this QR code and you get to me.
And thank you, Alireza, for your wonderful presentation.
Sure. Thank you for having me. Take care.
Thank you so much. Bye-bye, everyone. Bye-bye.